Good day, everyone. How are we all doing? So it has been long. It has been a long time. I've actually posted on my YouTube channel, so I'm resuming back my YouTube channel. And today we're gonna be resuming with. I'm gonna be explaining the trade um, signals trade setup I sent to my free Telegram community, and how we're able to make today's profit into this market. So stay with me, guys. Make sure you subscribe if you're not subscribed to this YouTube channel, and make sure you like, share with your friends, uh, because I'm gonna be dropping new videos, more videos. That's definitely gonna help your growth in the forex market. So without further ado, let's jump in with what we have today. So today, um, in my free Telegram group, which is today's 20th of May, we were able to I was able to send two signals today, which was one on GU, which didn't actually go in our direction. You understand? This one was from yesterday. This buy was from yesterday on gold, which was invalid there. And so when GU didn't go in our direction, I sent a trade on Euro JPY, which is a buy, and you can see the trade actually went well in our direction. So that was the trade, and look at it, really going massively. Like currently the trade is still on though, but we're taking some partials already, as you can see. Look at the trade, wonderful trade signal today. Look at that, beautiful. More than 1:5 or 1:6. I didn't really calculate that, but that was a wonderful trade. So I'm going to be explaining to you guys how we're able to catch this trade. So it was really simple. It was a simple stuff. So I also sent a signal on AED USD, but the market didn't actually um it didn't come back to tag us into that trade. Let me show you guys. So look at that on ADUSD, as you can see. Look at that. So I saw the signal. Well, I was waiting for the market to actually come down to take out to reach this particular point. Market didn't go there. You understand? The market just kept on going in our direction without tagging us, which is not bad. That's how the market is. So now, how were we able to get this trade on Euro JPY? So it was really easy, really easy. First thing first, what I did was I had to know the direction of the trend, right? What is the market currently doing? So I saw that okay, the market has been bearish. You understand, following the current market structure on the 15 minutes time frame. So I observed that the market has been bearish in some ways. So what I just did was I went down to the 15 minutes coming. I went down to the, okay, I think 12 minutes. Was it 15 or 12 minutes coming? A minute, the chart is loading. So yeah, so I think it was 12 minutes if I'm not wrong. Yeah, 12 minutes time frame. So I went out to the 12 minutes time frame to look for. Now the reason why I went down to the 12 minutes time frame, give me a minute, was because I was looking to get a good I wanted to know what the direction of the trend is, right? So that's why I went down to the 12 minutes time frame to know the direction of the trend. You understand? From the 12 minutes, from the 10 minutes, let's just use 10 minutes time frame. So now on the 10 minutes time frame, what I observed, I saw that the market is bearish. So you can see on this eye market broke structure again, broke structure, came down a little bit, moved up, went down. So as you can see, market did all this stuff, went up a little bit, came down, went up, came down, and then went up. And was this low was very, it was an important low. This particular low right here, this low, as you can see, markets took, went down, went up, and then came down to create this particular low right here. Can you see this low? So when market did that, just mark out the low. So what I did was I just marked out the low, Why am I using that low? Because that low was what that was the last major low in the market. That was the last major low in the market, because that was the low that was created after this market created this high. So market took out this high from that low. So when market did that, I knew that okay, that simply means that this low is the last low the market has created before going to the upside, before breaking structure to the upside. So what is going on at the back of my mind is, will market continue to go to the downside after taking out this low, or will market reverse to the upside after taking out this low? So that is where the real question is, right? So this low right here, is what I call the passive, right? This is the passive, this is the passive, and this guy right here is the aggressor. Why is this the passive? This is the low that was created. That this low is just sitting right there. There's nothing happening. The market just created this low and went up, broke structure to the upside. Now this eye right here, just follow my mouse. Just follow my mouse. This eye right here is called the aggressor. Why is it called the aggressor? Because that is where the sellers, which is the opposite of this low, that is where they are coming to take out that low, right? That is the origin of the sellers. That is the origin of the aggressors. Those are the guys that are coming against the trend to either take out the low or continue to the upside, right? So those are we call them the aggressors. Now these aggressors right there, they are coming for one aim, to actually take out the passive, right? So they'll come take out the passive, and if the participants from the passive and the participants of the aggressors are converging, there will be an expansion. What is an expansion? An expansion is when the market comes back into a zone and then keeps on going to the downside, keep on moving in the direction, right? But if there is a divergence, not convergence now, a divergence, there will be a what we call an absorption, where the market will absorb all others and then reverse to the upside and hit its target, which is this eye. It's going to come back and hit its target, which is this eye right here. Can you see it? So this eye has been taken out already. So the next eye to be taken out is that eye. Market almost took out the eye, but maybe for some reason, but maybe today or tomorrow, I don't know. Today is almost over already. So market is going there to take out that eye, right? So I knew that at the back of my mind. Okay, this is my passive, this is my aggressors. So now how do I want to look for the participant of, so what you want to do, you want to look for the participant of the passive, and you want to look for the participant of the aggressors, right? The aggressors are the guys that take out the low of that passive, right? You will look for the participants of the aggressors and the participant of the passive. So what I do is, my own is simple. What I do is I look at the passive. When was the passive formed? The time, you understand, the date and the time when the passive was formed. And the aggressors, when was the aggressors formed? The time and the date when the aggressors was formed. So the aggressors, what I want to look for is, I want to see the aggressors and the passive. I want to see them have different time value, in the sense that at least they should have at least two difference in time value. Like maybe the aggressors the passive was formed in the previous day, and then the aggressors was formed in the day after, right? So, or the passive was formed in previous 4 hours and the aggressors was formed in the next 4 hours, something like that. So I don't want them to be in the same hour. At least they should have two differences in time, in their time differences, right? Two time differences. So you understand what I'm trying to explain when we get deep into the video. So now the next thing I want to do is I want to get the participants of this particular guy. So for the passive, you can see that passive was formed on the 19th of May, right? On the 19th of May, which was on Monday, which was yesterday, Monday, right? 19th of May. So now what I want to do is, I know that this one was formed on the 19th of May, and the guy that took out that low was formed on the 20th of May, which was today, right? So what I want to do is, first of all, you can see that, look at the time difference. It is daily, right? Daily time difference. This one was formed in the previous day, and this one was formed in the current day. So we want to look for the opening range on the daily time frame, right? We want to look for the opening range, the daily opening range, right? We want to look for the daily opening range, or you can say we want to look for the daily participant. You understand? So if the daily participant, if it's a D plus or a D minus, we want to know, right? So D plus is buyers and D minus is sellers. For those of you who are just getting to understand this concept. So what is my D plus? What I want to do, I go down to my 1 hour to look for the participants for the daily. So let's chill. Let's wait for our 1 hour chart to load. Good. So on the 1 hour time frame, what I want to look for, let's go back to that low. Okay, good. So look at the low right here. You can see it. This is the low right here. So now this is the low, which is 19. So I want to look for the opening range of 19 on the 1 hour time frame. So what's the opening range of 19? As you can see, this is the opening range of 19th of May. Look at it right here. It is a sell opening range, right? It is a sell opening range. So we have, this is a D minus, right? D minus. Why the opening range of the aggressors on the daily is a D plus, right? So look at it. This is 23. This the new day, which is a buy opening range, is a D plus. So we have D minus, we have D plus. That is a divergence on the daily opening range, right? So now the next thing on our line is we want to look for the 4 hours opening range. Remember, at least there must be two different, which is it can be daily, it can be 4 hours and hour and 1 hour difference, or we can have 4 hours and 1 hour. You understand? You can't just use only 1 hour as a difference. There are cases whereby you can use 1 hour as a difference. You understand? Maybe later on when we're doing the videos, when we're doing all this review, you get to understand all those things. So now I go down to my 4 hours to look for my 4 hours coordinates, right? I want to look for my coordinates on the 4 hours, my 4 hours opening range coordinates. That's what I want to look for, right? So that's so I want to look for the 4 hours. So what is this one? Open at 2100, right? 2100. So it is under 2000, right? Which is the 4 hours time frame. So 2000, we go down to 2000 is a sell opening range. So 2000 is a sell opening range, which is H4 minus, right? And then this one is 545. That simply means that it opened under 400, which is 4 o'clock. So 4 o'clock, what is the opening range of 4 o'clock? Right here, the opening range of 4 o'clock is also a sell opening range. You can see this one is a sell opening range, yes, sell opening range, and then the opening range of 4 o'clock also is a sell opening range. So that one right there is not diverging, but what they are converging. So that's an issue, that's the problem. So what we want to do is we want to wait till a new 4 hours candle is being formed, so that we can look for opening range if it's going to diverge. So this one is H4 minus, so we are looking for H4 plus in this particular area. So if we go down, let's check. The next hour will be 8 o'clock, right? 8 o'clock. 8 o'clock. As you can see, this is 7:45, this is 8 o'clock. So you can see that is a buy opening range. It took out the high of the previous candle, so it's a buy opening range. So that's a buy opening range. That simply means that we've seen what we are looking for, which is H4 plus. So we have H4 minus here, we have H4 minus right here already, and now we've seen H4 plus. So now that we've seen H4 plus, wait for the market to take out the low, and then we'll buy. We're gonna get to the entry later on. So let's go down to the 5 minutes time frame to look for the hourly opening range. So this one is 2100. As you can see, is the sell opening range. Why the guy that took out the aggressors that took out that passive low is 5:45. So what is the opening range of 5 o'clock? Also a sell opening range. The next one, opening range of 6 o'clock. 6 o'clock does not have an opening range. Opening range of 7 o'clock. 7 o'clock is a sell opening range. What about 8 o'clock? So we can see that 8 o'clock is a buy opening range. So 8 o'clock we have 1 hour plus here, and then we have 1 hour minus right here. So we have plus and minus, they are diverging each other. So everything is complete already, all the criteria is complete. Now the next question is, how did we get our entry? Very simple, very easy, stress free. So now before we actually have our entry, we want to confirm this low. Is this low a true low? How do we confirm it? Using the candles. We want to check if there's a money transfer at that low, because we want to be sure if the participant at that low, if they are just ordinary retail traders or institutional traders. So this time we want to confirm that. So how do we confirm that? Using money transfer. So this is 40 using money transfer. Sorry, remember we actually took stuff from the 10 minutes time frame. Sorry, it's 10 minutes. Yeah. So let's go back to that low, right? So this is 36, this is 36, this is 35, and this 39. There was a money transfer right there. So now money transfer, that means that low is valid. That is an institutional low, not just a retail low. So the candle, when market took out that low, that passive low, we will check the confirmation after we've seen all our coordinates. We want to check the confirmation using money transfer also. So this is 17, this is 9, and this is 23. You understand? So that is a confirmation for us. So normally this is where we should enter the trade, right here at this low, and then our stop loss just at the low, and target will be target will be at this high. So that's it, simple stuff. You can see market is still running. You understand? Market is still running. There might be some bit of moving upside, downside, but we still know that market is still going to go all the way high there, all the way up there to go and take out that low. So what we want to see, if you can see any opportunity, if market takes out this low, look for passive and all those things, blah blah blah. You understand? You can look for entries to continue the price all the way to the upside. So what am I saying? Look at it, beautiful trade right here, beautiful trade, more than 1 ratio 10 hour, currently running more than 1 ratio 10 hour. Look at the pips, we're risking about 5 pips, and currently we are up 69 pips, which is more than 1 ratio 10 hour. So you can see how beautiful this particular concept is. Understand your passive, who are your passive and who are your aggressors. You understand? When there's a convergence, don't trade until you see a divergence. When you see divergence, you trade, and when there's a divergence, a total divergence, then what you should be looking for is the market will definitely go in your direction. When there's a total divergence, you just see that speed, that movement, that swift movement that will just push the market all the way to your take profit. The same thing happened to gold. You understand? Today I saw that, okay, gold, most people were looking to sell, but gold just kept on expanding. Why was it expanding? Because there was no divergence, there was convergence, right? There was convergence. So that's why the market kept on expanding to the upside, until I saw an entry on the 5 minutes, and market just boom all the way to the upside using that 5 minutes entry. So that is how it is. So this will be all for today. Trade is still currently running, and I'll be looking for an entry from this particular low. If I can see an entry, I'll take the entry, and our major target is still that particular high. Market is still getting there, you understand? So let's see how it goes. So that will be all for today. Take care, see you guys tomorrow. Cheers.